Hello everyone, welcome back to TechnoChart's YouTube channel, and in today's video I am going to talk about a unique option selling strategy for making 3% per month, that is for consistent returns. So this video is for those people who are happy with making around 35 to 40% per year after taxes and all, and this is without any kind of manual effort. So we are going to talk about a strategy that can be automated as well in Quantiply app. Now, for the app that we are going to use for automation is known as Quantiply, and for which the link is there in the description below. Now, this is the PNL of my today's Friday's PNL basically. Now, I had faced a loss of minor 23,000, and that is only 0.2% of my capital. So the capital that I have deployed is around 1 crore rupees right now. Right now, the feature that we are going to use is known as the closest premium range, and the closest premium range is a strategy where we select the options not based on the strike like ATM, OTM 100, OTM 200, but rather based on premium values. So basically we are going to go and select 100 rupees premium or 200 rupees premium. It does not matter to us whether it is 100 points out of the money, or whether it is at the money, or whether it is in the money. So for example, 100 points premium would be 500 to 600 points OTM on Fridays basically, but the same 100 points on Thursdays would be near at the it could be at the money or probably 100 points OTM, right, depending upon the VIX and all. Now if we have a condition like closest premium 100, then this will be approximately 5 600 700 points OTM on Fridays depending upon the VIX, and it could be 300 points OTM on Wednesday but ATM on expiries, as I've mentioned. Now this is a good theta capturing strategy, because we are going from out of the money, from very far out of the money, we are going near at the money strike prices, right? So here the backtesting platform that I'm going to use is basically Stockmock platform, for which the link is there in the description below. Now if you sign up on Stockmock and use the same number for Quantiply as well, you can get up to 10% discount on Quantiply for running this strategy. Okay, so the link is there for Quantiply, the link is also there. Now the strategy one. So what is the first strategy? So the first strategy that I'm going to talk about is 9:30 a.m. 200 CPR. Basically, I have named it like this. Now basically the time that the starting time of the strategy is 9:30 a.m. The instrument that we are going to trade is Bank Nifty weekly option. The strike that I am going to select, or we are going to select, is strike should be greater than 200 rupees, and it should be immediately greater than 200 rupees. So for example, if the algo gets two three different strike prices, from for example 210 or 210 basically, and 250 and 200 and let's say 90. This is just an example. So in this case it is going to select the strike price which is immediately above 200, and that is 210. Okay, so it does not matter whether it has 250 or 270 as a next number. We have to select the immediate number, that is the strike price that is just immediately above 200 rupees, right? Now the stop loss that is there, that we are going to apply, is a very unique stop loss, and that is known as 0.5% spot per leg. That means, for example, we have shorted 200, let's say that we have shorted a call option at 210 rupees, this is CE, and we have shorted another put option at 220 rupees. Now for call option, the stop loss would be 0.5% movement of spot price in the upper direction, and for put option the stop loss would be 0.5% stop loss in the lower direction, that is on the downside. Now if Bank Nifty at the start of the day, basically at 9:30 a.m., it will take the reference from 9:30 a.m. basically, not from 9:15. So let's assume that at 9:30 a.m. the Bank Nifty spot was around 40,000. Okay, so in this case, the stop loss for the call option would be 200 points up based upon the 40,000 value of spot price, and that would be 0.5% of 40,000, that is 200 points up. Okay, so if Bank Nifty moves 200 points up, whatever the strike price would be for this call option, or whatever the price would be of call option, it would automatically exit based upon this inherent spot value, right? Similarly for the put option as well, if Bank Nifty moves 200 points down here, probably this option could be, it depends upon the day how much option value can increase. If it is at the money strike price, for example on Wednesday, probably if it is at the money strike price, then this option can move approximately zero point 0.5 delta, right? If bank nifty moves 200 points on Friday, then it is a very this would be a very out of the money option, then this would not gain that much, right? So understanding how the strategy here is basically is really important. Now the strategy that we are going to trade is every day. The exit of the strategy is at 1:59 p.m. or it could be stop loss. There is no target, and it is a loss making in reversals. For example, if bank nifty moves like this up, then our CE stop losses are getting hit. So in this case, if bank nifty moves, if there is a reversal from the upside and bank nifty moves down, then as the stop loss of the other side is moved to SL at cost, basically the stop loss of other side is moved at cost, hence the strategy is loss making in reversals, and we are taking the required margin as 2 lakhs rupees per lot. So the strategy characteristics I've already talked about. Now the Stockmock configuration, I'll just show you the Stockmock configuration here. So we are selling a call option greater than 200 rupees, a put option greater than 200 rupees, putting a spot percentage value as zero point 0.5. The stop loss is moved to cost, and there is no re-entry, and there is nothing like re-entry or re-execute here. So from timing that we are going to run is from 9:30 to 1:59 or 2 probably. You can keep any time. I have taken here as 2 o'clock. You can keep it as 1:59:58 as well. Okay, so this is the strategy one. I will be sharing the PDF of this strategy in the Telegram link, which I will be sharing in the description below. I will pin the Telegram link as well. You can join that Telegram. You can check out the PDF. You can check out the link for this same as well in the Telegram. Right now, moving ahead. So the strategy two that we are going to trade is basically the 9:30 a.m. 100 CPR, and it's a similar concept where we are shorting a call option and a put option that is immediately greater than 100 rupees, and basically it could be of any strike price here. The stop loss for each leg would be 0.5% per leg, and SL will be moved to cost. The exit time for the strategy would be 3 p.m. or stop loss, and the number of days that we are trading is basically every day. Now this can cover reversals as well, as we have applied one re-entry in this strategy. Now basically, what is re-entry? For example, if we have shorted, let's say that our we have shorted a call option at 110 rupees and its stop loss got hit at 160 rupees. Now for example, if markets move up like this, then our stop loss will hit at 160 rupees, assume that. Now for example, if bank nifty moves like this again, and it the price again touches the price again touches 110 rupees here, then again we are going to go and short the call option because the price has reversed, and this strategy can cover reversals as well up to a certain limit, because we are using max re-entry, that is one, and margin required would be 2 lakh rupees. So the configuration for this strategy would be greater than 100 call option put option, spot percentage value as 0.5, 0.5, re-entry that we are going to use is 1 and there is only one re-entry, and the strategy runs from 10:30 a.m. to 3 p.m. So there is you can optimize this strategy even more by using basically protect the profits, that is lock and trail, and you can use M2M stop losses as well to reduce the drawdowns of these strategies as well. Now we are going to talk about the strategy optimization in the coming future, right? So the Stockmock configuration is also shared in the PDF that I will be sharing in the description below. Now the strategy three that is there, that we are going to trade is basically from 2 p.m. to 3:25. So the margin that we are going to use is basically of the strategy of S1, because S1 is going to get exited at 1 p.m. 1:59, basically at 2 p.m. exactly, and at 2 p.m. we are going to run this strategy. Now why are we running this strategy in the afternoon? Basically, as we have generally seen that in the afternoon the reversals are very common. So for example, if bank nifty has moved 500 points, then generally in the afternoon you'll see selling happening, and that is why we want to capture that selling, or this is generally to capture the downside move of the afternoon, right? Because we have seen that most of the times there is a move on the downside rather than the upside. So strike price that we are going to select is greater than 200 rupees of at it could be of any strike. Now the premium that we have to select is 200. The stop loss that I have tested is with 0.2% basically. Now you can test this stop loss with 0.5, 0.7, or if you want to make it non-directional, then you can test it with 1% stop loss also per leg. Now it depends upon how you want to trade the strategy. I want to trade the strategy as a directional strategy rather than a theta capturing strategy. So I have taken a zero point 0.2 stop loss. You can take 0.3 stop loss, 0.4% stop loss as well. That won't be an issue. Now the exit is at 325 or stop loss here. Now the number days that we are going to trade is every day, and it is good for afternoon reversals. The margin that would be required is 2 lakh rupees only from the S1, and there is no additional margin required for this. So psychology, I have already mentioned that we want to capture reversals on the downside, and hence we have kept the stop loss very less. So and you can test the entire combination with different stop losses. So Stockmock configuration for this as well would be here, where I have kept where I have sold a call option at 200 rupees, greater than 200 rupees. I've sold a put option greater than 200 rupees. The spot percentage is 0.2, and there is no re-entry and re-execute. So even if there is no change here, right? So you can test the exit timing from 115 sorry 315 to 325 as well. That is not an issue here. And you can test the configuration, right? So now in this case, this is the entire summary of the rules that we are going to trade basically. Strategy 1, strategy 2, and strategy 3. Now you can take a screenshot of this, or you can use the link in the description below to join the Telegram group, and you can download this PDF, right? Now the results that I've shown you are with 1% slippage. So this mostly includes the brokerage plus taxes as well, and these are idealistic returns, right? So after running the strategy in a combined manner, in a basket manner, I can see the margin that is required is around basically the margin that is required here is around 1 second. So margin required is around 3.3 lakh rupees as shown here. You can keep up to 3.5 lakh as well for running the strategy, or 4 lakh rupees if you want to add the drawdown as well. Now the MDD here, the MDD max recovery days is around 30 from March to June. The expectancy is good because the stats here look average because we are trading the strategy with a 1% SL, 1% slippage here. Now I can show you with 0.5% slippage as well, and I can give you a false result here as well. But I want to show you a idealistic returns that you can expect after reducing, or after uh, removing the taxes, after removing all the charges and all, right? Now I'm not telling or I'm not saying that this strategy is very great or something like that. You can add this strategy to your original basket if you're already trading, or you can also start trading the strategy and then later combine it with other different strategies here, right? Now in this case, let's test out some different strategies uh, with different percentage SLs here as well. Now as you can clearly see, the strategy, or this is giving me around 45% returns in 2019, 47% returns in 2020, 38% returns in 2021, and approximately 27% returns in 2022. So you can add this basket as well into your own original older basket. Now we can test this strategy basically with a different percentage SL as well. So let's test this strategy with 0.3% SL probably, and change the timing here as well from 15 to 15:25. Right, let's check it out. I'm showing you live backtesting so that you can understand how you can optimize a strategy as well, if you want to, or if you want to have a different result from the strategy that I've shared already, right? So till the time the backtest runs, I am going to show you here. Yeah. So because the margin required here was shown as 3 lakh rupees, the returns were shown as 30% here. Now strategy optimization, as you can clearly see, Expectancy of strategy with 1% DD, 1% slippage is 0.34. RMDD is okay now, and win ratio is 58%. Remember, I'm sharing the strategy with 1% slippage. I will show the backtest with 0.5% slippage as well, and you can optimize this strategy basically by using many features like lock and trail, trailing stop loss to reduce the drawdown, and you can also try to add re-entry to S1 and S3 as well to make different combinations. Try using different closest premium ranges like greater than 150, lesser than 150, greater than 300, lesser than 300, probably, to have different results as well. You can change the percentage SL by increasing or decreasing for S1, S2, S3 as well. Now remember, higher DD doesn't mean strategy that the strategy is bad here, because it's not compulsory that you can run this basket with a different basket, that I can say, right? So I also run many strategies which are having 10% DD, 15% individual DDs, but when they are combined in a basket, the basket gives me 4% to 5% DD, right? So this is a very important thing that you have to remember, ki it is not compulsory a strategy with a higher DD is a bad strategy. I personally use a lot of strategies. Now if you are a person which has a capital of more than 10 lakh rupees, and you want to automate your strategies, and you want me to help you out regarding creating new baskets for for your capital, then you can use the link in the description below for checking out the backtest results for various capitals as well. So for example, my strategies are, I have created an option buying strategy that which has given flat returns this year, but the other strategies that I have created have given decent 3 to 4% this month as well, in the October month, right? So various strategies with 7 lakh, 28 lakh basket have been created, and you can check out the backtest PDF. For example, you can see the expectancy is touching 0.9, and MDD is only 2.5%, and the returns are approximately 260% with average returns of 50% per annum, right? Now these are the basically the reviews or the clients PNL and their feedback, where people are making consistent money. These are not call services, but basically I help people design strategies, and I create strategies for a minimum cost, right? Now this is my personal equity curve till October, and which has hit a new equity curve high in the last 3 days. October had been okay for me, which I made around 1% only, and the clients that I handle made around 2.5% overall in this month, right? Now you can use the link in the description below as well to understand the strategies in a much better manner. Now let's say that okay, so if you like the video, do share it with the friends, and if you want me to make a video on the setup of Quantiply of the same strategy, then do share this video with your friends, and comment below if you want me to make a video on how to automate this strategy entirely, right? So for that, the Quantiply link is there in the description below. I can share, I'm sharing the link of Quantiply in the description. You can use that link to sign up on Quantiply, and probably I will make a different video on how to uh, automate this strategy in Quantiply. If you like the video, do share it with your friends. Thank you.